Thank you everyone for joining us this morning. We're joined by HPS, and the topic today is chasing dollars, not discounts. Not all networks are created equal. So to give you a quick rundown of what we'll be covering today, we'll go through, just give you a quick introduction to ourselves. We'll jump into the HPS solution, the HPS networks. We'll talk about bundled services. We'll have a discount discussion, go over employer value, and then we'll open it up for any questions at the end. So before we get started here, I'm Ashley Johnson. I'm a risk management consultant with the STAR Group. I specialize in self-funding, which the STAR Group does as well. I have a certification in both self-funding from NAHU and also advanced certification from NAHU as well, National Association of Health Underwriters. I'm joined today by Dan Kulak. If you want to say hello, Dan.
Good morning, everybody. Very excited to be here and hear what Paul from HPS has to say for us.
The STAR Group, just in case you don't know who we are and what our passion is, we are consultants, not brokers. So we specialize in that self-funding, and we pride ourselves in being disruptors in the market. So we really want to bring our clients and prospects new solutions in group benefits. We like to go outside of the box and really break the mold. So we're going to look at solutions that really can help you reduce that spend, your second to third highest spend year over year, which is group benefits. We really do have extensive knowledge here in underwriting and actuarial training as well. And the reason we wanted to partner with HPS is they have a different network solution from what you're seeing out there, other than the BUCA world, something that is not only a solution that can reduce your overall healthcare spend, but also provides a robust benefit to your employees as well, which is something everyone's trying to do today in regards to retaining and attracting new employees. So we really wanted to provide a look into what is possible out there in other network solutions. We're joined today by Paul Mueller from HPS. If you want to go ahead and introduce yourself and take it away.
Thanks so much, Ashley and Dan, for having me. I'm excited to speak to everyone today about Health Payment Systems, HPS, and what we can bring to the table for your benefit program. I'm originally from here, Milwaukee, Wisconsin. Really have a passion to help employers in Wisconsin grow. I've seen a lot of my friends after college leave and not come back. I went away to college and actually came back. So that's where part of my passion comes from, is wanting the Wisconsin community to be a place where people want to live and to have businesses thrive is part of that, having good, attractive jobs. And the better I can do to address that second or third cost item that Ashley alluded to, the better our businesses will succeed here in this area. So that's where my passion comes from. So I did, like I said, I did go away to school. I went down to Xavier University in Cincinnati, started at one of the major BUCA carriers down there for 5-6 years, and actually interned at a brokerage house there prior to that in college. So I'm one of the few people that intentionally got into the business. A lot of folks here, you know, stuff to say they kind of accidentally found their way into health insurance. I kind of intended to do so, and then went to another BUCA carrier to come home to Milwaukee, and was excited to do so about 6 years ago, and was there for about 5 years. And coming up on a year now, I made the switch to HPS because my experience for that decade or so in the BUCA world found that my most creative aspect of my job was figuring out how to say no to my clients and broker partners while not making them upset. You know, anything creative, anything outside the box that were cost saving measures were quickly shut down internally if it didn't fit into our box that we were selling. And so that's where the switch over to this side, where I'm working with Health Payment Systems as an independent Wisconsin network through third-party administrative partners, has been a lot of fun, because anytime I get asked a question, it's, yeah, let's try to work together on that, and let's see if we can get a solution, then how HPS can fit to support that solution. So like I said, I've been in the industry for over a decade now and doing stuff with the BUCA world, and now on this side, and it's been a great transition for me to coming over to HPS. to kind of set the stage on today's healthcare experience, and again, where HPS fits in here, 44% of employers are increasing deductibles and or co-payments as a way to manage healthcare costs. And 20%, that number there is shifting the patient financial responsibility. It used to be 6 to 10% would be the deductible, and out of pocket would carry that 6 to 10% of the plan, and then the rest of it would be picked up by the employer. And that's shifting now to be about 20%. If you had a chance to attend the education hour Star Group put on with AMPS, they echoed this sentiment at the start of theirs, where they showed from 2006 to 2016, there was a 58% increase in premiums and a 78% increase in employee contributions. So again, this is just what we're seeing widespread in the industry. As costs go up and there's not really a lot we can do to contain it, quote unquote, the employees are taking on more patient responsibility in terms of deductible and out of pocket. So that, plus Wisconsin families, 80% of them find medical billing confusing, and 39% of Americans say they could not afford a surprise bill of $400 or more. So those two dynamics on the employer side and then the individual family experience side equals 56% of healthcare users are hesitant to get care because of the billing, just because of the billing. That's besides the fact of people not wanting to know what's wrong with them and avoiding preventive care and not having a primary care physician. It's over half the people don't want to get care just because they don't want to deal with the bills that come with it. That's a huge problem when we're talking about preventive care, because we all know in this industry, preventive care is really the only way you can avoid a high cost claimant down the road. So we wanted to tackle that here at HPS. So the HPS solution and where we come from is our founder was actually in 2005 was actually in one of those spots where they had to use the healthcare system. A family member was a high cost claimant, and they were one of those folks that unfortunately were snake bitten by the healthcare system, and their claims could never get right, no matter how many times they called into customer service and had things reprocessed and all that jazz. That is a headache, to say the least. They got caught in the system and they could not get their claims right. So our founder thought, how can I create something better that's more user friendly? And what he and as a group of folks that became the HPS founding members came up with a super EOB, which is a consolidated statement that aggregates all out-of-pocket charges into one bill. Doesn't matter how many family members saw providers in that month, doesn't matter how many different providers that those family members saw, you get one bill from HPS and you pay that one bill back to HPS. You don't get an AOB and match it up with all the bills and get on the phone and make all the different payments, or get on multiple payment plans if you can't afford it. You just make the one payment. It's really easy to use. You can make the payment from your phone, you can call in, do online, mail, whatever the case may be. And two major benefits of doing this is you may have heard employees be in situations where they can't get past a certain point with a provider unless they make an upfront payment, because the provider is not going to be at risk to lose money. Essentially, they want an upfront guarantee that things are going to get paid. That does not happen with HPS because our providers get paid by HPS and their contracts dictate that. So there is no situation where people get caught in that, well, I need this procedure done, but I can't until I pay X amount of money. It doesn't happen with HPS. The other thing that's really great about our Super EOB is there's interest-free financing available for our members. Really no questions asked. If you can't afford it, you call into our customer service line and you get on a payment plan. So it's really, really easy to do. I called in when I had my first child, just see if I could get on a payment plan or maybe get some sort of like discount, if you will, if I paid everything lump sum. And I was told, no payment plan, you owe this and you owe it within, whatever, 30 days, period, end of story. And that was, $5,000 that I owed because I was on a deductible plan. If I didn't have that, that would be a huge problem for me and I'd have to figure something out. So that's a big benefit to our members. And our member survey we did last year really tells the story. 91% of our members believe that the Super EOB is better than traditional tools for understanding healthcare expenses, and 93% believe it's better for paying the expenses as well. So our members really love that experience, and we really put everything that we do here at HPS with the member in mind. And that leads to a net promoter score of 75 out of 100. again, going back to my experience on the health insurance side, first of all, we would never get metrics in the 90s for anything. Customer satisfaction rates just wouldn't happen. And then the average health insurer's net promoter score is 13, where again, ours is 75, which that is how likely you are to recommend a company to a friend or family member. So they really enjoy the experience once they become on as a member with HPS. To talk through a little bit how things work at HPS, I won't get into the weeds on this, I promise I'll keep this high level. The way things work, claims work with HPS, you go to a provider, so you're at that orange circle there, and then the provider will send that claim to HPS for reprocessing, or repricing, I should say, sorry. And then we send that over to your third-party administrator, and we'll talk about those here on the subsequent slide, but your TPA, third-party administrator. And normally that's it. The TPA takes it, they pay the provider their portion, and then they bill the member essentially through an EOB, and then the member has to pay the provider the rest of the balance. But HPS then comes back in the middle here, and then TPA sends it back to us after the claim has been bumped up against the plan, so adjudicated. And then we pay the provider both the employee and the employer portion. So that includes the deductible and out-of-pocket, copays, etc. That's all paid to the provider, and then we bill that member the super EOB. So the provider is getting their money within 20 days, 100% of it per our contracts with them, and then that's where we work with the member, and then we don't have to, the members aren't put in a position where they got to again pay multiple bills and all that stuff. So it's a lot easier process, and then again we have the payment plans and all that for members when they need it, of course, as well. Since we're buying essentially the receivable from the provider, they win because they get quick, full payments up front. So this gets into the value proposition of HPS here. So the providers win with that because they're getting, their money right away. And I don't care if you're a provider or any other business, you like to get your money in a quick manner. So they win with that. Employees win because they have an easy to understand benefit program through the super EOB that includes financial assistance. And then we'll talk in subsequent slides here on how the employers win, how you win with the broad network and innovative ways that we're achieving cost and quality. So just to talk a little bit about our cost quickly, I'm again not going to go into detail, but because we are buying that receivable from the provider, our cost is not a straight PEPM like some competitors might have. We evaluate how much risk essentially we're buying. So it's kind of plan design driven, industry driven, and our costs can fluctuate based on plan design. So if there's a rich plan design, our costs could go all the way down to zero because we evaluate that we have no risk and we have other revenue streams that we take advantage of, and we just don't have to bill you anything as an employer. Or we would bill a percentage of allowed. Our standard is 1.7% of allowed, but again, it can vary based on plan design and how much risk HPS is then taking on from the deductible, out-of-pocket, etc. To transition now to the employer's value and what HPS can bring your group and your company here, we have a competitive comprehensive provider network. So going back to how we were founded with that super EOB, well, to get that super EOB up and running, we were having to reach out to providers to say, hey, can we buy the receivables from you so we can put everything on a super EOB? And that naturally led to a conversation of, well, why don't we contract together as a network? So we actually kind of became a network by accident. We wanted to be a super EOB technology company, but then it was a natural progression to become a network because we had all these contracts in place with providers. So we've grown the network to 96 hospitals and over 24,000 individual providers. See the HPS network hospitals there on the top, and they're in the dark blue dots there. And then you see we're kind of in the eastern part of the state as far as our footprint. We go over to Madison and certainly go up into the northwest. But if we want more access, we do have a secondary network solution we can tap into. But the eastern part of the state, Milwaukee to Green Bay, is really our bread and butter. We go down to Kenosha as well. So that's where we really live and play. And like I said, we have the state coverage. We have solutions for out of state as well through our TPA partners. So we can get outside of our sweet spot, so to speak, very easily. But that's kind of where we live today. And our trend, annual medical trend, is for the last 3 years is 2.3%. And then again, that includes large claims in there. On the carrier side, coming from where I came from, our mission was to get 5% or less. Bend the trend was a saying we'd say at my first, stop in the VUCA world. How can we bend the trend? What can we do? How can we can create a roadmap? Let's get to 5% or less. We never got there. Went to my next carrier stop. We were in the 8 to 9% medical trend pretty consistently. And to get to 2.3% right off the bat coming here was very eye-opening. That speaks to not only the contracts that we're putting in place with inflation protections, and they're really focused on cost containment over the long term. We don't want to play a game where just because a loud amount goes up and a build amount doesn't, now we're getting a better discount. We don't really care about that. What we care about is the medical trend, which is the per employee per month, the dollars going out. Hence the title of the of the PowerPoint here, the presentation of being chasing dollars, not discounts. We care about that medical trend very much, and so we're partnering with the providers that will work with us on that and being selective in that approach. And then like I said, we have secondary network option if you want more broad access as well. To talk about bundled contracting a little bit, to get into the innovation that the HPS network brings to the table. A bundled procedure is a single payment that has all care to treat a payment covered underneath it for a specific illness, condition, or medical event. And that's opposed to a fee for service. So if I'm getting a knee replacement and I go to the same provider, a couple years apart, let's say I had to get both knees. I have heard this story many times. The cost could be very, very different depending on what procedures were done, what follow-up care was needed, et cetera. I mean, you're talking thousands of dollars in difference for the same person at the same provider group, just a couple years apart, and it's a completely different price. And that's a fee-for-service world where it depends on the situation, what that doctor orders for the service. So the single payment for the bundled contract, by contrast, includes not only the procedure itself, but any related care. So you're getting a consistent and low cost for the employer, plus provider accountability, because what a bundled contract does is it forces the provider to evaluate, okay, what do I actually need for that knee replacement? What are the things that need to happen every single time? And what is the most effective price I can do that at? And then I roll that out, and that is the price that I contracted with HPS. And again, it includes the follow-up care, it includes everything that's related to it. And then it's on the provider to hit that cost metric. It's not putting it on a variance and just the employer is on the hook for whatever variance, and there's no way to fight City Hall, so to speak. I mean, the knee's the knee, and the cost was incurred, and by the time you notice there was a difference a couple years apart, the money is out the door, and if you even notice at all. Whereas this keeps the consistent low cost for the employer, and the savings per episode of care range from $5,000 to $50,000. It can be even more than that, but really, that's kind of the main bandwidth there is $5,000 to $50,000. So we have bundles integrated right into the HPS network with Holy Family and Manitowoc today, GI Associates, and we're in negotiations with some others. Should be able to announce at least one of those very, very soon. I'm very excited about it. It'll be kind of all over the state, so it's very exciting. It's including the Milwaukee area here. And then we also have additional bundles through Novo Health, which is up in the valley, but also just came down to the Milwaukee area. They're in the Waukesha area now, so west Milwaukee, western suburbs. So Novo Health does include a 90-day warranty for any follow-up care at no cost, and they're industry leading with quality of care. Their infection rate is 0.3%, their readmit rate is 0.4%. To put that in context, the infection rate in Wisconsin is #1 in the nation. So we lead the country in infection rates here in Wisconsin. So it's kind of known that Wisconsin is expensive healthcare, but it does lead to quality oftentimes. So at least we have that going for it. And the infection rate in Wisconsin is 1.8%. So 1.8% is the leader in the whole country is Wisconsin, and Novo's 0.3%. So you're talking about high quality, low cost providers. This is the definition of with Novo Health. So again, that one does require a separate contract with Novo, but once you sign that contract, everything's integrated again. The other ones are just built right into the network. And the ones that we're proposing to include will be built right into the network as well. So here's a list of just, we know what kind of procedures we're talking about. We're talking about hip replacements, knee replacements, like I alluded to. meniscus repair, so rotator cuff surgery, shoulder, that kind of stuff that's a little bit more predictable in cost. We're able to, with that orthopedics, so we're able to get those bundles on the book. The one down there, cervical fusion, that's one where we're talking about on the next slide. That's why I have that highlighted there, where you're talking about a $42,000 in savings. So we have the bundled rate of cost, that's our contracted bundled rate, and then we average cost in Wisconsin, eastern Wisconsin. And the reason why we know this is because we contract is for, it's what we do. We set contracts with providers, so we know based on data that we buy from different sources like Milliman, and what we do with our competitive intelligence to make sure that we're setting our prices effectively. This is what the average cost of a lot of these procedures, of what these procedures are in Wisconsin versus what our bundled rates are. So you can see the savings right down the board of what bundle contracts can do. And again, there's no follow-up care associated with these. It's all included in the initial payment. So again, kind of getting into back to the theme of the presentation here of the dollars, the discounts. These bundle contracts are all about what you pay, and it's not what you pay. So we're not concerned about the discount. So discount by definition is 1 minus, got the parentheses, allowed amount divided by the eligible bill amount, and that will get your discount that you'll see on a report. You'll see 48%, 1%, whatever it is from your current carrier or TPA. You'll get that discount and what you're basically saving versus the general public and what they would charge off the street for that allowed amount. Well, our bundles generate a 0% discount in our reporting. But if we would take the actuarial value of those discounts, it'd actually be a 68, 69% discount for pretty much all of them. So why is that? The way that we set up our bundles is the allowed amount is the eligible. So 1 minus 1 equals 0, because things divided by each other that are the same, you get 1. The 1 minus 1 is 0. We get no discount credit for those bundles. And the reason is we want full transparency, and we want to be able to give you that list that I just showed you and say, this is what you're going to be paying for that cervical fusion. We want you to know it's $27,000 or about $28,000, and that is what it is. We don't want a game of, well, you paid $20,000, but it's really, this much and all that. That's not what we're interested in. So you have two options as an employer. You can get a 50% discount on a report and pay that $70,000, or you can get a 0% discount on a report and pay $27,750. I know what my choice is, but without really thinking about it, a lot of employers are choosing that 50% discount because that's the way things are presented today. It's what is my discount? Well, we need to understand what that discount is and how we can back into it, really find out what dollars are driving. So to give a case study and to help illustrate that example, I'll go through, this is a 2019 case study that I kind of picked at random. I was looking through employers that we had, and I mean, like I said, it wasn't like scouring. This is one I just kind of picked and saw like, oh, they got a lot of bundles. We'll check this one out. So this is an employer in the Fox Valley with 138 employees. Their allowed amount is 1.7 million, about 1.75 million. And the employer paid $1.3 million. So allowed versus employer paid, spoiler alert, that's not a great discount. But they had 14 procedures that qualified for bundles. 12 were utilized by members, so they still had 2 opportunities, and that's the kind of reporting we can provide and say, hey, these 2 people didn't actually get the bundles. If you want to do something to incent that in the future, etc. We get this is all part of our standing reporting that I pulled this from for this particular client. So the savings that were generated from the bundles were actually $160,000. The average cost being $344,000 versus what they paid of $184,000. So $160,000 is real money. You're talking about full-time employees here that you can be hiring with that kind of money. So again, your options are to pay the $344,000 or the $184,000. Again, I think that's a pretty obvious answer of what you would want. But to talk about why this is a difficult conversation sometimes on the marketplace is our discount that would be on a report historically would be 25.7%. Now, if you look at that 25.7% discount on a report, and you know in your head that you're supposed to be hovering around 50, depending on where you are geographically. I mean, a little over 50 or a little under 50 in the high 40s. Well, you'd be freaking out and be saying, well, why is my discount so low? And other brokers might tell you that, like, hey, this is not the right program for you because look at your discount. If you add in things that other carriers will, and again, I was on that side for a number of years, so I know that there's things that are included in the discount, such as duplicates, claim edits, non-covered items, things like that. That gets our discount up to 36.9%. So duplicate claims meaning the same claim is submitted twice, so they basically take credit for the discount twice. We don't really get that because we pay our all of our bills within 20 days. So we don't really get a duplicate claim because they're getting their money fast. Whereas on the other side, they'll get a large claim and they'll hold it, they'll evaluate it, they'll ask for more information, etc. Maybe get a resubmission somewhere in there. I mean, a lot of providers will send what's called a tracer claim, just send it right away, and after a certain period of time, make sure that claim is being paid. So they'll get that discount twice. So if we add in all that stuff, we're at 36.9. But then if we take credit for our bundles, our discount's actually 46.5. So if we take that actuarial value of that 68.7%, now we're talking about 46.5% discount in the Valley, which is actually very competitive. That's where discounts live. When you're talking about the Fox Valley area, we're looking just as well as anybody else on a kind of a more apples to apples comparison. So this is where the way that we do business and wanting to be transparent and wanting to show employers what they're going to pay for certain services kind of works against us, and why it really is important to understand not only how HPS does business, but how the industry does business. So we're not just turning the page on things because a discount looks a certain way and it meets our expectations. We want to understand what goes into that discount and ask questions of our carrier reps to make sure that we fully understand how things are calculated, and ultimately, the dollars are what are gonna speak to whether or not those discounts are actually effective. To kind of shift gears a little bit here, talk about third-party administrators. So again, my experience on the carrier side comes into play here in understanding the business model and how the service world works over there, and how you can be sent into a mailbox and you'll say you'll get a response within 3 to 5 days, and meanwhile, as an employer, you got HR getting their doors knocked on and phone calls in those 3 to 5 days, and you're wondering what's going on over there. And then you get a response that's less than adequate from that team that's helping you out over there, and then you resubmit more questions, and now that's another 3 to 5 days, and now you're talking about 2-3 weeks of this employee that's stuck in the middle, and that's not fun for anybody involved. It really isn't. And that's part of it. And also the thing I talked about at the top of fitting into a carrier box was on the independent TPA side, the third party administrators, it's a lot more of a concierge, high touch experience, where you have a dedicated claims processor who knows benefits plans and the programs of your company. You're going to be connected to a live person every time. You're not going through a huge, automated box to figure out what's going on here and where do I need to go. And then you finally get to a live person and you get transferred and all that. And then your group has access to the full claim information, and you can work directly with a claims processor in many cases with these TPAs, where if your employer can, your HR team could call in and say, hey, this is not processed correctly, and that claims processor can flip the claim right there with you on the phone. So it's a lot higher service that you have on the TPA side. Again, you have inpatient and outpatient bill audits that you can put on to make sure that things paid correctly. If you want an audit on the carrier side, it'll cost you, to put it mildly. That kind of stuff is reviews that they'll do pretty regularly with TPAs. If they want to do some direct contracting, I'll talk about that here in a subsequent slide. There's concierge services for scheduling high cost services such as imaging that you can put in to make sure that people are going to the lowest cost provider that are still high quality. You put in transparency tools to make sure you're driving those high quality, low cost providers, and really have complete control of your plan design. You can put benefit-specific limits in. You can put a reward or a penalty model with tools to drive that utilization to make sure that, you know, we're going to the you say you want to incent bundles and you want an employee incentive to make sure that you're not missing out on that $42,000 on the cervical procedure. You can incent people to use those within our structure kind of any way you want. You're not, again, put into a box and say, well, you know, we have a product that kind of does that over here, and you can buy that and see if it works for you. So you can slice and dice the plan whichever way you want, and then also you can put in specialty pharmacy limits, all sorts of stuff that you can do that's really innovative to try to contain the costs, in addition to what we're doing on the network side. So these TPAs are really sophisticated in the things that they can do in terms of the customization of the plan to make sure that the employer dollars are protected, while also having the employees have a much better experience when they, if and when they do run into an issue, that they're actually talking to people and getting that resolved quickly. The two sides of that TPA are really, really important. And when I'm, again, talking about those net promoter scores of 13 versus 75, this is part of it. This, you know, you're talking about calling someone and talking them through the problem, and they actually have the power to do something about it with you on the phone, versus a mailbox or a call-in system and the person not really knowing, and you're one of millions of people calling in that day. It's just a different experience. And we do have connectivity to several TPAs. That list is down there at the bottom. I'm not going to go through it all. They all have strengths they work through, and I can, you know, if you're ever interested in talking through that, I can walk you through that. Ashley and Dan can walk you through that. The Star Group team can, and talk you through the differences between each of them. And if there's someone that you come across, you know, with Star Groupers, you know, that hey, we've heard a good reputation of this TPA, we're willing to work with other TPAs as well. We just need to get set up with them. So, you know, we're always open to new partnerships in the market when they make sense. But this is the current list of connectivity that we have. We do have adaptability as well. So talked about the TPA partners just a moment ago for vendor flexibility of who we are connected to today, and that we're open to connecting with others as well. The pharmacy benefit managers is a huge thing. Going back to the BUCA world there, you're dictated to who you can go to, and it's most of the time it's owned by that carrier. So times you're robbing Peter to pay Paul in those situations where you're making money on one side or the other, and you know, maybe they can make one side look better, but they're going to be making money on you know, with the PBM, the pharmacy benefit manager. This would allow you the flexibility to know, like, okay, you know, the TPA is going to give me their best bet, their best price, and going to do everything in their power to lower my fixed costs, and then HPS is doing everything they can to lower their claim costs. And then, you know, you can use a case management if you want to use either the TPAs, or if you wanted to outsource that to a case management group that is going to be doing everything to lower their costs because you're paying them for just that. You know, that sort of thing is, you know, that every piece of the puzzle is going to be working their hardest to save you the money, because that's the piece that they own. Whereas the carrier side, you know, they can make money on stop loss and lose money over here and whatnot. So they have an ability to kind of make it up in other places. Whereas if you can pick your partners on this side that you know are going to drive the savings, because that's all they're hired to do. So it's a really, really more direct way to get to those cost saving measures by picking your vendors. And then stop loss carriers and captives, both PBMs and stop loss carriers, you're going to be charged a fee on the carrier side to carve that stuff out. They call it carve out, whereas really you're just picking who you want to work with. You know, it's kind of a weird way to think about it, where it's like, well, I just think this PBM does it better than you. Why can't I just work with them and not pay an absorbent cost just to do so? And then, you know, on the stop loss side, we also will work with captives. So smaller groups interested in self-funding might be interested in a captive because you're kind of pooling your risk a little bit on that side. So, and again, you're going to be charged to do that, and really carriers don't really like you when you do that anyway with captives. So anyway, we'll work with any vendors. Long story short, with transparency tools, whatever it is, we'll work with whatever works for you that lowers that cost. Whatever vendor you feel comfortable with, we'll plug and play with you. And then two other things that definitely are something that would be a no-no in any other world is direct contracting and reference-based pricing. If you have high volume in a certain provider group or hospital system, and you know that, you think you have some buying power, and you want to try to put a direct contract in place, we'll support you in that here at HPS in any way that we can. And then you can run that contract through the TPA and put that kind of in conjunction with what HPS is doing. It works, better in more rural areas because there's more buying power, the less people there are. But certainly if you feel you got a chance to do that in, Milwaukee, Green Bay, we would support you in that. And you could go kind of use HPS in conjunction with what you're doing on the direct contract with that provider to get whatever deal that you think you can and whatever we can help you get. And then reference-based pricing is another thing where if you are interested in reference-based pricing, where you don't really have a network necessarily, you're kind of just putting out a percentage of Medicare on and paying the provider that way. Again, AMPS was talking to the group here a few weeks back, and that's what they specialize in. If you wanted us to partner with an AMPS to do a dual option type thing where you have, AMPS providing their services on the RBP to a subset of the population, and then you have a network, to support it, we can certainly do that because, the larger claims with RBP, people that need to utilize a lot of healthcare, they sometimes will get caught in the middle with litigation with reference-based pricing. And that's where having an actual network with contracts in place is really, really helpful. If you want to dip your toe in that water, let us know. We're open to all these discussions. Again, back to my original thing, we want a solution with you. We want to partner. We want to say yes in any way that we can. So let us know how we can support you. And just, it's something that we're keeping on our radar at HPS as well, is thinking about how we can take kind of a step in that direction. And, I don't have any details right now, but just know that HPS is, kind of in that headspace a little bit of, how can we not only partner with, say, an AMPS or any other reference-based pricing vendor, but how can we move that direction? So stay tuned for that. We're an evolving company here that we're trying to figure out ways to solution the marketplace together and make sure that we're containing the cost for our Wisconsin employer groups. Kind of bring us back to that value proposition. So hopefully you feel that we covered how employers are supported. We're client focused, we're consumer friendly, we have transparent partnerships, we're doing innovative contracting, and again, we're chasing dollars, not discounts. That's really our goal, is to make sure that we're giving employers a broad network, but we're also focusing on those innovative ways to achieve quality and cost for you. Next steps would be, do a claims comparison and coverage and analysis. So we can do a reprice for you, so take a look at what savings are possible with HPS. And also we can give you projected savings within our bundles. So, we can give you what things would hit our contracts normally. And then also if you start to implement the bundles, or I should say incent the bundles, and make sure that people are taking advantage of those, we can give you projected savings on that. And let's see if we're the right fit. Because again, we're the network, so we will be the backbone for anything that you do. But if any of that other stuff interested you, if you're interested in going the direction of reference-based pricing, or you're sick of the customer service, or whatever it is, you want to really get granular with your plan design to make sure that it's benefiting your employees in the right way. That's all stuff that HPS can be the foundation with the network, and then you can build out your plan whatever way that you would want from there. So again, really, really appreciate your time today. I think we're going to be open up for questions here in a moment. I'll pass it back to Ashley and Dan to see if they have anything that they want to mention before we move into those questions. But again, thank you so much for your time today, and really appreciate the opportunity.
Thank you, Paul. That was outstanding information. Thank you for sharing that. We do have a few questions that have come in, about 4 or 5 of them, so we'll kind of go through the list with you here. And the first two, I think, kind of combo together, so I'll give them both to you and then kind of give you a chance to speak to both of them if that works out best. One of them is do you have a wide variety of stop-loss carriers that recognize the HPS network and model? And then the second one that kind of goes with it, I think, a little bit here is there's perception in the marketplace that independent networks don't stack up well versus the larger carriers. Can you speak to both of those?
Yeah, sure. I mean, it's a fair question, and one I get, fairly often. To go through the second one first, with the perception that independent networks don't stack up versus larger carriers, I guess I would start with being mindful of the messenger first and foremost with that. like I said, I was on the carrier side, and when I was speaking to discounts and I saw 52 or something on a report, I knew I would just have to mention that's what the discount is, and we would breeze right through that. And because it wouldn't be questioned, and it met expectations. And being on the carrier side, the conversation benefits you to have that discount be the leading point of of how you win. So you don't really try to push to get into the details there. You hit the 52% and you kind of move on. We talked about the game and how we can get our discount to look more in line and more competitive with what we're doing there. And so you kind of had some insights into what the game is. I can tell you, being on that side, that I had a client that was supposed to have achieved a certain discount based in the sales process, and they called us on it a couple years into the relationship, and because our reporting was getting the discount that was not hitting what we said we would. So I had someone on my team that I sent a report to, and that report came back and we'd hit the discount. So and there's a lot of justification behind it about there were new deals that weren't accounted for, and things like that. And certainly I'm not saying that wasn't true, but to think that there's not a game being played with the discount, that would unfortunately is not the case. It just isn't. And so that's kind of the first piece of it. And then the second piece of it actually speaks right to the second question too, is if you can't really, okay, you don't want to trust me because I'm a sales guy on HPS, but I get that, that's fair. And now I'm kind of giving you some insight on what carriers do and how the game's played a little bit. Well, what's a third party that could evaluate networks? And that, and Dan, to your point about the couple questions going together, that would be the stop loss carriers. And we do have a list of stop loss carriers that we've presented to, so to make sure our value is understood. And they have our network rated the same as the top carriers, the major carriers, so that they don't care if the business goes to HPS or goes to the VUCA world. What they care about is what is the risk that they're buying. And if they feel that HPS is delivering the same value as the VUCA world, that should be the indication that you need to understand that we're pretty much on par, especially with the programs that you put in place with the TPAs to mitigate costs that I talk about. And so some of those carriers are Spectrum, HM Insurance Group, HCC Life Insurance, Medical Risk Managers, Sun Life, Symetra, QBE. So yeah, there's a bank of stop loss carriers that you can go through, and then Sun Life has captives and whatnot, and a lot of them have captives that I talked about earlier that you can go through. That again, they understand our value, they know how HPS contracts and what we're doing for our clients and how we're financially performing, and we're priced on par with the VUCA world.
Perfect. Thank you, Paul. I have another question here when it comes to auditing. Where does claims auditing come in, and is there a certain dollar amount that will trigger HPS to audit the claim?
So that's going to vary by the TPA, because the TPA actually handles the auditing part of it. They're mostly larger claims, so you're talking maybe 50,000. It could be lower depending on the group size and what they want. So it's a lot of it is the size of the claim, and when they do an audit to make sure that it was paid correctly, and they'll break out the claim and look at each service line item and make sure that it was a necessary procedure. And sometimes those TPAs will actually pull out services or bundle them together and kind of reprice the claim themselves because they don't feel that it was submitted correctly. That's where they're saving the money. On the carrier side, they're not really doing that. They're taking the claim as it's sent in and just paying it. But it does vary by the TPA. It's not something that HPS is handling. We do it in support with our TPAs. So and then you can also do a claim audit all together, where you're looking at the whole group and the whole year and making sure everything paid on more of a retroactive basis. So and the claim audits that I've seen done with the carrier side, they're basically just looking to see if everything paid according to contract. They're not evaluating to see if it was something that should have been submitted that way by the provider. It's, did it bump up against the plan correctly? And that's a major difference in the claim audits that you'll see on our side versus their side.
Thank you. That was great information there. And we have one final question here. When implementing innovative strategies, how can HPS support in making sure employees and their families take advantage of the programs that are put in place?
Yeah, so that is something I didn't really speak to. That's our client engagement team. So I appreciate that question. So they work very closely with our actuarial team. And we are, again, kind of what we talked about through the conversation today, we're fully transparent and feel that the claims data is your data, and we'll provide it in any way, in any format that you request. And our actuarial team will really dig in and provide that. And we'll turn it around quick too. I mean, we'll give you like a full data dump within a few days if you really need it. And we'll also, do further analysis if that's what you need. Whereas that kind of request can take 6 to 8 weeks on the other side. So that's where, our client engagement team that knows our programs will work with the TPA to make sure that our programs are being implemented and give you that reporting on the bundles, what missed opportunities were there. If you want to incent those bundles, we'll provide the information on a member level to see who actually got the bundles and who deserves it, an incentive. Obviously, we're keeping PHI in mind with all this stuff, and we're protecting people's information appropriately. But at the end of the day, this is your data as the client, and we will fully support you to make sure that all the programs that HPS has to offer, or anything you put into place with your TPA partner, is being taken advantage of to the fullest extent.
Great. Paul, thank you for your time today. It was a lot of great information, and thanks for answering the questions at the end. We do appreciate that relationship with you, Paul, and HPS.
Thank you, everyone, for joining us today. We really appreciate it. If you have any questions, I know Paul went over the possible next steps. We would be happy to go ahead and get going on looking at an analysis to see if HPS and a possible third party would be a good solution for you and your company. Also, as we mentioned earlier, and Paul referenced it, we've had a number of other education hours. One was on reference-based pricing and AMPS. We also had Scout RX for PBM solutions. So if you are interested in that, please reach out to Dan and I, and we can make sure you get a recorded copy of those presentations as well. So thanks again, Paul, and thank you everyone for joining us. Have a great rest of your day.